Well, hello, everybody. This is Michael DeGioia from Dash Trader. This is our weekly market recap for the week of September 21st to September 25th. And as always, I'm joined here today with my co-host, Jill Malandrino, global markets reporter for NASDAQ. And we finally had a decent up day today, Jill. How was your week?
It's much better now that, like I told you, it's my favorite piece of media that I do for the week, because I know after this, it is cocktail in hand and the weekend is here. But yeah, we had a decent day today, but I would say that the corrective action has been healthy, right? So I think in this market, there's something for all kinds of traders and investors. So if you're a short-term trader, a day trader like you, Mike, this volatility is a gift. I would imagine you and many of your guys are having some of the best years that they've had in your career as a result of 2020. I live with a trader, so I hear about this all the time. And, the volatility has been a gift after, the past 2-3 years of everything going from the bottom left to the top right and nothing in between. So, it's a good opportunity for you guys. As a longer term investor, such as myself, it's also a fantastic opportunity because, when you think about your time frames, even if you go to 2008, 2009, if you go to, the 800 point dip on the futures when Trump first got elected and the recovery that we've seen since then, it's really a blip on the radar. And I'll tell you what, I've been acquiring shares in my 401k at discount prices. So I'll take that. Keep investing in that every 2 weeks and look for other opportunities in my other investment accounts. So there's something there for everybody. But I think this is the kind of market that all types of investors have been looking for quite some time.
I totally agree. I think that this has been a tremendous traders market, and a little bit of volatility is actually healthy at this point. So our first piece of news is 4 weeks of losses for the stock market. This is the first time the market's been down significantly really since March, right? I mean, there's really been no other significant pullback. What do you think the main cause of the market pullback was? Because there really was no individual singular catalyst.
I think it's a confluence of a number of factors. Certainly the second wave and the potential to go on more lockdowns is going to impact already with the fragile economy. I believe Israel has put a 2-week lockdown in place where you can only go 0.6 of a mile within your home, right? And there's a curfew in place as well. I heard bits and pieces of it on the TV, but I think that's really what that's like. So is that going to go through Europe as they get more COVID-19 cases? Is it going to go more through the US? Because it's following the same pattern that we saw for the first time around. So you have that. Then the fact that our national election cycle is just so chaotic and such a mess certainly lends to that as well. And I think President Trump's comments this week saying that he's not going to leave the White House as easy and all the other rhetoric he says it's not only is it uncertain for the markets, but as a society, like that concerns me, right? So there's just a number of things going on. I also think that there's some reality with the market as well, that while it might have had a V-shaped recovery, the economy is doing, something else. And I also think as you start to look to 2021, 2020, and I mentioned this last week, was about business continuity and keeping your employees on the payroll. 2021 is going to start to be about right-sizing the business, understanding what hybrid workforces look like, and going back to profitability. And that profitability is going to involve some job cuts, right? And those are the good, high salary paying jobs, and they're going to have to be competing with the workers that are already out of work. Yes. So there's a lot going on there.
There's a lot going on everywhere. I mean, I as far as like COVID-19, I think that Israel put in a 2-week lockdown. The United Kingdom shut down everything except for all restaurants and bars have been shut down at 10 o'clock. No bar service, stuff like that. So, I mean, there is certainly a wave of lockdowns. Spain certainly has local lockdowns as well as some other lockdowns as well. France experienced an increase in cases as well, almost, way above the original first wave of cases. And, that's all been going on. The president's comments certainly are unusual in American history. I believe, a part of that has been motivated by the fact that there's kind of all kinds of questions of voter, uncertainty in terms of the voting process, whether that's going to be fouled up or in some way going to be unfair. So I think that the uncertainty is what's causing the volatility. But beyond that, there was no individual single catalyst besides the market being just overextended and traders, investors, and funds looking for profit taking, right?
Yeah, I mean, look at the run in the market that you've had, particularly, NASDAQ 100 stocks in certain areas of the S&P 500. And I feel, I was talking about this earlier, but when we were going through 2018 and 2019, and of course it was essentially led by the same stocks that are leading it now, there was that narrative, well, you know what, small cap stocks, Russell 2000 isn't, they haven't participated in like 2-3 years. So it was always like, if the market's really going to take off, you're going to need those small cap American companies that, they truly are the sign of the economy to catch up. So certainly they got crushed during this COVID-19 exercise, and they still haven't come back. They didn't make that kind of comeback like the newer economy stocks did. So that, I think we're still going to, struggle a little bit in certain pockets of the market.
Yes, absolutely. No, definitely. So let's take a look at some of the market action. I mean, we are 4 weeks down. So from a stock and market perspective, we definitely had 4 weeks down. You can see here. Let me just go back one slide here. My laser pointer out. So here we can see that the markets had the first very big volatile week. We've had second week down, third week down. I was talking about a potential bounce last week, and that's kind of what we got. I mean, we did gap down, but we actually closed significantly up from the point that we gapped down on Monday, right, Joe? I mean, if you see this bar here, this green bar, I mean, you could see that we started here, we closed here. So that the market, even though that it's gone down, that momentum has slowed, and we've made a significant bounce back from where we started the week, right? We started the week here, and now we've come back up to here. The question I have, and this is really a very important technical element, and this is part of the reason why we always look at closed market charts. We look at the charts of the close of the period. There's a good possibility that we've made a 1-2 bounce, and we could make a 3 continuation down. That would actually take us to the prior high. So if we did get further selling, this green bar, this green weekly bar in the middle, would be the pause bar to lead to a secondary bounce. Now, it also could be a reversal bar that will lead to a further bounce back up to the highs. I have, we're not going to know, but the volume has stayed high, although it's declining from the first week sell-off, meaning that the volume on the market is much higher than the previous average volume for most of the run up. And this is on the QQQ, obviously, which has been leading the market up. On the actual daily chart, you can see that this was a flat week. I mean, yes, it's slightly down, but it is a down to mostly flat week.
Well, Mike, let me ask you that. If you can go back to the Qs, actually, you can leave it on the SPY. It essentially looks the same.
I went back to
so I had asked you this last week, and again, I am not even pretending to be a technician like you are, but the first of the 4-week sell-off, we saw that significant drop. Like that's really where, the bulk of the selling was. And I asked you last week, the second and third week, it looks like it's consolidating a bit. This week, it doesn't look much different in that pattern. So perhaps maybe this is where we are, where people are nervous to put fresh money to work, right?
So,
they've already sold their positions, maybe, or maybe this is just the range we're going to be in until we get some clarity around the election.
It's possible. I mean, this could be the buy the dip point, right? Which clearly people bought the dip today because the market was up significantly. People were buying the dip yesterday. They were buying the dip today. I mean, if you think about it, you're at a 10 to 15% discount on most stocks from the prior highs. If the market's going to resume its uptrend, you got a 10 to 15% discount. On some stocks, it's as much as 20%. And we're going to look at some of those stocks, and particularly the stocks that were the leaders on the way up, or the ones that were, are also the ones that are already starting to bounce. Like Apple already bounced significantly. Tesla never really, it sold off for like 3 days, and then it already started going up higher, which we looked at last week. So let's take a look at the S&P. The S&P, basically is at a good level. I mean, this is a level that it could potentially bounce at. It's kind of taken the head off of the breakout above the pre-pandemic highs. Um, so it kind of got above there. And then, of course, we put in what's called a high wave reversal bar, which is a wider range bar than the previous week. So it broke out up to the upside, it broke out to the downside. It's a high wave bar, and it looks like it's going to continue down. And that was the first bar. And then obviously the momentum slowed over the next 3 weeks, finally putting in what's called a bullish reversal bar. That's a green reversal bar after you've had 3 red weeks. And the reason why the bar is green is because even though the price is lower than the weekly close last week, okay, the bar, the open is lower than the close, right? The close is higher than the open, therefore the bar is color coded green. The main reason for that is because we had a very big gap down on Monday, which caused us to get that green reversal bar. And the Dow is, of course, continuing to be the least bullish, the most bearish of all the charts that we've talked about. And so here's the Dow, the DIA, which represents the Dow Jones Industrial Average, and it's really a doji. It's not a green bar. The Nasdaq is clearly a green bar. The S&P clearly a green bar. The DIA kind of a doji. A doji is a bar where the open and the close are at the same price. And what I've noticed, which was kind of astounding, is that the biggest pullback, of course, was in gold. And gold did not really bounce with the markets. So gold, although is still very, very much up for the year, did not bounce with the markets today. So you can see that the market, gold, very, very flat. Gold on the weekly had a very big bearish week. So gold certainly not performing with the equities as strongly as the equities were. And though the market did not have an up week, gold certainly had a terrible week. So what I was talking about earlier is that, Apple here, had a very big sell-off, but it was one of the first stocks to sell off. And then, of course, Apple is now really had a very, very strong day today, and really almost took out the midpoint of the high from this little kind of W formation, and probably is working its way back up. The only thing I would say that's very negative for Apple is that it has a lot of overhead congestion in the charts from the moving averages. So the moving average and this little kind of congestion resistance to the left does not look good for Apple. And the reason I brought up Google is it's still showing to be continuing to be the weak man, as far as technology stocks go. So we see that Google is below all of its moving averages. It took out its prior support and continues to be much weaker than the other stocks. So on that note, Jill, any comments, thoughts, considerations about any individual stocks that you've spoken about, talked about this week?
I think it's really interesting to see what's happening with big tech, because it's like both sides of the aisle are really interested in how big they are, right? So that's kind of always been something with the Democrats, and worrying about just how much control, how much power, how much monopoly they have. And seems, over the past couple of weeks, we also have the GOP looking into that as well. And of course, we know, President Trump doesn't look on them that favorably also, and he's known to insert himself in these things. So it's going to be interesting to see what happens, like with Amazon and Google and Facebook, and I didn't catch the whole story. I think this was pre-market, but I think an advocacy group or something was formed for oversight over Facebook. I have to do more research on that, but that was something that was announced this morning. So I feel like that's really going to be a key focus for both parties. So I would imagine the legal teams at those companies are gearing up. So I think that's kind of interesting. Other than that, the guests I've had on my show this week are kind of taking the same approach as I had said earlier, between there being opportunities for short and long-term investors. It would almost be silly, to take money out completely, or at least not try to acquire companies that you've been looking to acquire at better levels, especially for a longer-term investor. But there's just a lot of uncertainty out there. If we look at it from a historical perspective, whether it's a Republican or Democrat that gets into office, that really doesn't impact the market as much as people think it does. What's truly impactful is the economy they inherit, and really what sets that backdrop is policy, right? And we have not spoken about policy whatsoever, and it's 40 days away from the election. There are so many other things. COVID-19, of course, the chaotic state of the elections.
Ballots.
Well, all that, right? But we don't know what tax policy looks like. We sort of do under Trump, but Biden has a little bit more of a clearer plan, and we know, what his tax thoughts are. But that also impacts retirement. It impacts Medicare. It impacts the ability for savings and for retirement. The Social Security Trust runs out in 2035. What kind of policy are we doing around that? So I don't know. Nobody knows what that's going to look like, right? Policy counts more than I think people realize.
I haven't heard. Jill, I have not heard anything.
No idea.
About policy, plans, what I'm going to do. The campaign promises have been virtually nil. I have not heard much from either candidate. I mean, to be totally honest with you, I mean, I guess we know more about what Trump plans to do because he's been the president already. But I've heard a little bit from Biden, but very, very little in terms of campaign promises. Right?
Yeah. I have not heard anything about policy. It really is. Sadly, and again, I don't want to get political. I can't believe this is the best two choices that we have. And we have no idea what the direction of this country is going to look like. Nobody knows. We haven't spoken about policy. And I think you and I spoke about this last week. I would imagine that their campaigns probably don't want them debating as much as we've seen in previous election cycles. Only because they're loose cannons and they don't sometimes stick to the script or policy.
You're 100% right. This is the worst two candidates, I think, in an American. I mean, probably the only one that probably stacked up to this is the last election, which was also two terrible candidates.
Right, but that's what I'm saying. Nobody knows what that's going to look like. Can you imagine that, you're in the C-suite and you don't now, it's going to be difficult to set budget aside. It's going to be difficult to know what the health environment is going to look like. Are we just continuing business operations? Or are we going to put money into R&D for future investment? The finance team has no clue what policy is going to look like or when that's going to be adjusted. Like I can't even imagine trying to lead a company right now.
Yep. I also watched that movie, The Social Dilemma. It's called The Social Dilemma. If you haven't watched it, it's on Netflix. The Social Dilemma, I think, is probably going to become a very big dilemma for all of the tech giants because they're talking about social responsibility for technology giants. I mean, the whole concept of the show was this former Google engineer said that you have 100 white software developers from California developing software that affects 2 billion people, and that there's an ethical concern there's no ethical consideration for what this does to children. There's no Saturday morning guidelines for regulations in terms of social media use of children. There's no regulation really at all. And the companies are saying that they need to regulate themselves or they're going to regulate themselves. And yet their whole business model is about selling whatever creates the most advertising, and fake news generates 6 times or 10 times more the response than real news. So you have this situation where the country is getting more and more polarized by more and more fake news. And if you haven't watched it, I have to say it was probably, one of the most eye-opening, although I kind of subliminally knew that this was going on. Mm-hmm. I think that's the reason you're going to be hearing a lot from both sides of the aisle going forward about regulating and doing something about these tech giants, which their profit seems to be diametrically opposite to what's good for people, and you're constantly being bombarded with all kinds of images of stuff trying to be sold to you. So, I mean, that they've created these money-making machines where they can churn up the dial. But I think that you're going to be hearing a lot about this social dilemma in politics, no matter which party wins.
Yeah, and I would agree with you. I would say, the hardest thing out of all this is just how things are so divisive, and we should be one country, one Americans, and the fact that it's we just aren't being treated like that, and it starts from the top down. If you're the president and you're supposed to love all the people that you represent, I just don't understand how you can pitch your own people against each other. I just don't understand how that works. And look, there are bad apples on every side. This isn't exclusive to one party or the other, right? Mm-hmm. But it's just like, where's the solidarity, right? Like, remember what, after 9/11, how everybody came together. It didn't matter, red, blue, none of that.
Everybody. Right? Leadership is to lead everybody.
It's just that I don't want to hate someone because they have a different political opinion than I do. Like the whole point of free speech is to be able to have these conversations. And I can't imagine not liking a fellow American. It just doesn't make any sense to me. So I'm hoping we can recover.
I totally agree. And I think that part of the polarization has to do with with people getting their news from various social media sources, because the way the social media algorithms work is they feed people what they want to see. The algorithm watches what your use is, what your search activity was, and then it shoots back at you what it thinks you want to see. So if you keep looking at, the device, the bad, kind of, political conservative political ideologies or socialist political ideology, you're going to get more of what you've already looked at in the past. So it's kind of like, it's like snowballing effect, where people become more and more polarized because these search engine algorithms, whether it's Facebook's or Google's or whoever's, keeps sending you what it thinks you want to watch, whether it's true or not. And it has no idea whether it's true or not. It just sends you whatever it's going to make the most money on advertising. Do you follow me?
100%. And the thing is, with a lot of these platforms, it gives people an easier voice from behind a screen to express these opinions, whereas that ability didn't exist before.
It's like the guy who yells at you on the telephone because he's not with you, because he's a telephone bully, right? So and social media is the same. People are, when they're in a social, like a live social context, they're not likely to say the things that you're saying because they're right there with you, right? When you're behind this wall of the computer, people create all kinds of derisive lies, and sometimes derisive lies it's a proven fact on social media platforms and on the internet. These lies actually get 6 times to 7 times more attention than the truth. So you have a world where nobody believes anybody, nobody trusts anybody. Everybody's getting more and more polarized, and unfortunately, our president is very much, very much a user of social media and tweeting and whatnot, and kind of a product of this. So it's not just the president. I mean, it's the entire country has gone in this direction. It's caused a lot of division, unfortunately, instead of solidarity.
Mm-hmm.
So. Well, on that note, Jill, no more doom and gloom for us. We're going to jump off to our announcements and finish up our week. Okay, so for anybody who is not aware, the fall intermediate competition is getting started. Registration runs through Sunday, October 4th. Competition starts on October 5th, goes from October 5th to October 16th. 10 days of trading. The cost is only $150. If you didn't get in on our early bird discount, remember, we always have early bird discounts. Always better to sign up early. Ticket prices cover the period of usage for the Dash Trader and the software platform and the market data. You could visit Number One Best Trader for more information to sign up. The prizes include the winner's name displayed on the NASDAQ market site tower in Times Square, be a guest on Jill's show, trade talks for an interview, and you'll have a virtual luncheon with a special guest from the trading world. Lunch provided by DAS and up to 6 months of access of the DAS Trader Pro platform. For those of you who are waiting for my options classes, they should be finished up this week. this weekend, and she'll be having a new series on trading options coming out this week. Probably be scheduled to be released shortly thereafter. Our next newsletter will be available soon as well. That's the end of the month newsletter will be available this week. I work on that as well. If you do not receive emails from Dash, you can certainly sign up at dashtrader.com. Dash Trader Pro channel. We will continue to offer educational videos on YouTube. So I will be sharing my options videos on that channel in the very near future. That's YouTube at Dash Trader Pro, Dash Trader Pro. Subscribe to our YouTube channel. And if you haven't already subscribed to our various social media outlets, our social media links, you can go to LinkedIn, Twitter, Facebook, and Instagram and just look up Dash Trader. And you can join there and follow us on those social media links. And that's all she wrote. So it's time for the weekend, Jill. Get that cocktail ready.
Definitely ready. All right. Thanks again for having us on.
I'll be going. See you next week, Jill.
All right. Take care, everybody.
All right, everybody. Bye-bye.